Hello, everyone, and welcome to this podcast. Today, we're going to discuss the views of the global EY organization, that we will refer to as EY, as they relate to the recent exposure draft on climate related disclosures as proposed by the International Sustainability Standards Board, the ISSB. The exposure draft, which is also referred to as IFRS S2 climate related disclosures, with IFRS standing for International Financial Reporting Standards, was recently published and open to public consultation, and EY formally submitted its views on the proposed requirements to the ISSB in a comment letter. I'm Roy Linthorst. I'm a senior manager in EY Global Corporate Reporting Services and EY Climate Change and Sustainability Services based in the Netherlands. I'm joined today by my colleague Rebecca Wilkinson-Blanc, who is part of the EY Global Corporate Reporting Services and also a senior manager in EY Climate Change and Sustainability Services based in London, UK. Rebecca and I were involved in the comment letter process, and today we would like to share with you a high-level view of how EY has responded to the ISSB's exposure draft on climate-related disclosures. We are recording this podcast in September 2022. Note that today's session won't cover the specific contents of the exposure draft itself. Instead, our intention is to focus on the comment letter that EY submitted to the ISSB on July 29th in response to the specific questions posed by the ISSB in the exposure draft itself. The full comment letter can be found online at ey.com/IFRS and is available to everyone. At this site, you will also be able to listen to another podcast that colleagues from EY Global Corporate Reporting Services have put together that focuses on the ISSB's exposure draft on general requirements for disclosure of sustainability-related financial information, which is also referred to as IFRS S1. But for today's purpose, we'll be keeping the discussion centered around climate-related disclosures. And with that, Rebecca, what can people expect when they first have a look at the comment letter?
Thanks, Roy, and welcome everyone. I would say at first glance, people are likely to notice that the comment letter for S2 is quite lengthy, but this doesn't mean that EY is not supportive or disagrees with the ISSB proposals. And there is a reference to this upfront in the cover letter of the comment letter, essentially stating that the length and the volume of the overall response is really more a consequence of the number of detailed questions that are posed in the exposure draft. So the comment letter does go into a fair bit of detail and is quite comprehensive, but this is genuinely meant to provide the ISSB with as much feedback as possible. And I'll also just flag for listeners that the comment letter is essentially divided into two sections. So a cover letter up front, where EY's overall comments and views are summarized, followed by a detailed appendix that contains answers to all of the individual questions posed by the ISSB about the proposed requirements. So if you would like to get a general sense of EY's views on the proposed requirements, then reading the cover letter is probably a good place to start.
One of the key areas in the proposed requirements is the disclosure of the entity's carbon emissions. The ISSB proposals require the application of the Greenhouse Gas Protocol to report on these emissions. Does EY's comment letter support this, Rebecca?
Yes, so the comment letter for S2 does support the proposed requirement to apply the Greenhouse Gas Protocol. However, it's worth noting that the protocol was first developed some 20 years ago, so we encourage the ISSB to engage with the GHG protocol really as a matter of urgency, and this is to help make sure that the protocol remains fit for purpose in the current context of the requirements. And this is also part of a broader comment that we make regarding references made to external frameworks, in that the ISSB will need to come up with a plan for how to engage with relevant bodies to make sure that these frameworks are maintained and updated. And this is especially important given that these external frameworks are outside of the remit of the ISSB's own due process.
The comment letter also discusses Scope 3 greenhouse gas emissions, or sometimes also called GHG emissions, which are typically more complicated in terms of GHG accounting and disclosures, given that they are essentially an entity's indirect emissions, so tied to indirect emissions occurring across the entity's value chain, for example, from purchased goods and services, business travel, upstream and downstream transportation and distribution, investments, and so on. What does the comment letter say about Scope 3 GHG requirements? Does EY support those?
We do support the disclosure of Scope 3 emissions, but in the comment letter for S2, we suggest that Scope 3 emissions are part of a phased-in approach. That is to say that they're not made mandatory right away, but that entities are given a bit of time in order to set up the processes and controls that they'll need to gather the required information. For example, entities will need to get information about their value chains, which is outside of the boundary of the traditional reporting entity that we're used to in financial reporting. Therefore, collecting this external data from various suppliers, customers, and so forth might be challenging in the immediate term, and especially if you want to get good quality data.
That's true, Rebecca. And Scope 3 GHG emission disclosures provide users with important information, and such information can be used when tackling the climate crisis. A lot of entities are already reporting on Scopes 1 and 2, but Scope 3 GHG emissions are also important and are often a large proportion of emissions. EY is therefore supportive of them being included as a mandatory requirement in the proposed standards, notwithstanding your prior comment, noting that entities will need time to prepare for this, of course. And the proposed requirements also include guidance on scenario analysis to help investors assess the resilience of an entity's strategy to climate change, as well as disclosures of an entity's transition plan. There are also 7 cross-industry metric categories that all entities would be required to disclose on, and this would help contribute to more comparable information across entities.
Yes, and in the comment letter, we also recognize the ISSB's effort to incorporate a degree of flexibility in the requirement. So you mentioned scenario analysis. So for example, the proposed requirements do allow alternative techniques for scenario analysis. And we do believe that this can help strike a balance between the cost of implementing the requirements and the benefits produced. And it also fits nicely within the context of the building block approach. Another thing that I'll point out is that S2 also includes a comprehensive Appendix B, and this contains industry-specific topics and metrics that in large part draw from the industry metrics developed by the Sustainability Accounting Standards Board, or SASB, and which the ISSB has endeavored to internationalize and update. So, for example, removing references to US-specific content and adding metrics associated with financed emissions.
Yeah, thanks for mentioning that, Rebecca, because it's worth noting here that whilst EY is supportive of industry-specific content and requirements, there are some concerns highlighted in the comment letter regarding the content and structure of Appendix B, and suggest that the ISSB address some of these issues we specified before requiring Appendix B to be mandatory. That said, we do see value in using Appendix B as illustrative guidance that entities can use to identify climate-related risks and opportunities.
Indeed. So for now, the comment letter for S2 supports the inclusion of Appendix B as illustrative guidance, as you mentioned. And this is what we have suggested to the ISSB. However, in the longer term, we can foresee supporting the mandatory adoption of Appendix B once the ISSB has gone through the guidance in a bit more detail and has worked to reconcile the content and the structure in a way that will help entities in terms of adoption and implementation.
Thanks, Rebecca. And another area we outline in the comment letter that warrants some additional clarification is the use of some key terms. So, for example, material, significant, relevant, as well as the term climate related, which is open to a fair degree of interpretation and has implications in terms of the scope of what is being covered by the requirements. We also call for greater alignment between the terms used in the exposure draft as compared with how they are defined according to IFRS accounting standards. And again, materiality stands out as a prime example of a similar yet very distinct concept between accounting and sustainability reporting.
The comment letter also refers to challenges regarding future-oriented information. And Roy, I just wondered if you can maybe expand on that in a bit more detail for listeners.
Well, the proposed requirements call for disclosure over the medium and longer term of anticipated effects of sustainability-related and climate-related risks and opportunities on an entity's financial position and financial performance, and on its climate-related scenario analysis, which will be challenging to assess, especially quantitatively. Given that there is not always a direct relationship between such a significant risk or opportunity and the financial position or performance, and the challenge associated with clearly distinguishing sustainability-related and climate-related effects from all other effects on an entity's financial position, this could impact the reliability of information and the ability to verify future-oriented information. Recognizing these challenges, we therefore ask the ISSB to provide additional illustrative guidance and/or examples to assist entities.
The comment letter also mentions the effective date of the proposed standards and suggests that the ISSB considers aligning the effective dates of S2 as well as S1 with the dates of other major sustainability-related disclosure frameworks, such as the SEC in the US and the European standards.
Yeah, indeed. And on that front, it's worth noting that EY teams in the US and Europe also provided a response to the proposed US Securities and Exchange Commission requirements, the US SEC, on climate related disclosures and the proposals of European Financial Reporting Advisory Group, also EFRAG, for the European Sustainability Reporting Standards. Although the proposed standards obviously differ in certain aspects, our responses to the three consultations are quite similar. For example, the US SEC, EFRAG, and ISSB proposed requirements are all grounded in the four TCFD pillars, which we support. Also, all of the proposed requirements make a reference to the Greenhouse Gas Protocol, which we are also supportive of.
And on that last point, Roy, it's worth pointing out that the proposed European standards, they don't actually require mandatory application of the greenhouse gas protocol. Is that right? Because that's a bit different than the SEC and the ISSB.
Yeah, you're right. And actually, this raises another important point that is highlighted in the comment letter for S2 regarding the need for the ISSB, the US SEC, and the EFRAG to continue to coordinate their efforts in order to help achieve the goal of creating a truly global baseline of requirements.
Yeah, that's a really good point. So with that, we've managed to cover a lot of ground today, and both Roy and I hope that you've enjoyed the discussion. To summarize some of the main points that we've discussed today, the Global EY organization is broadly supportive of the ISSB proposals on climate-related disclosures and has outlined, in the form of a comment letter, several suggestions for the ISSB to consider when finalizing the standards, which are expected to be finalized early 2023. As Roy mentioned at the start of the podcast, the comment letter on S2 as well as S1 can be found online at ey.com/IFRS in case you'd like to have a closer look at the full comment letters. And with that, both Roy and I thank you for listening in, and we hope you have a great day. Take care, everyone.